Thank you for being here today. Welcome to both our online and our in-person audiences. We are recording this meeting. It's going to be available in the next couple of weeks on our Small Business Solutions Page. I'm Paige Walters. I'm our Director of Economic Development and Advocacy here at the Springfield Chamber. We're really excited to bring you programs like this. We're talking about regulatory issues. I first just want to shout out all of you small businesses in the room, your resiliency after weathering the last couple of weeks to be here, changing your mindset, here ready to learn about the Corporate Transparency Act, new regulations. So just a big, you guys do a lot of work in our community. And I really appreciate you making time to be here. And we're happy to bring you this information to help your small business succeed. So thank you. Purpose of these programs, the Small Business Solutions Hub, is really to bridge our technical and our business education needs of the small business community with the service providers and our resource partners and professional development opportunities to help your business thrive. We have a digital hub that's combined with these programs, and our sponsors on the hub are here to connect you with their resources too. And those include Ask Eric Computer Services, Belfort Property Restoration, Chambers Construction, Eugene Area Radio Stations, Hershner Hunter Attorneys, Oregon Community Credit Union, and WAFED Bank. Couple folks in the room. And our title sponsor, Kaiser Permanente, supporting our digital hub and our programs throughout the year. So here to say a couple words on behalf of Kaiser is Colleen Lawson, Senior Sales Associate. Thank you, Colleen, for being here today.
And I love how many people are in the room and how this has grown. This is a grassroots program that you can thank the staff here for having the ingenuity, the entrepreneurship, the resilience as well, because there were times when there wasn't a ton of people in the room, and you kind of wonder, did we do the right thing? Are we supporting the right people? So thank you all for showing up, because that means that we are on the right track. And you might think, well, why does somebody like Kaiser Permanente care? Because we're really a vibrant part of a thriving community. You can't have a healthy, happy community without access to high quality care, health care. And that means we have to be able to help the employees, the entrepreneurs here in the room. Some of you might not have employees yet, but one day you might. And you may be thinking about, how do I help them thrive and be their best and bring their best selves to my passion? And you all are here because you're passionate about the organizations that you have created. So thank you for being here, and again to the chamber. And I'm here to answer any questions that you might have about Kaiser Permanente. I live right here in the community, and love to talk about all the fun things that we're doing, not only at our state-of-the-art Chase Gardens Medical Office, but with all the partnerships that we have with the specialty care providers here in town. So Colleen Lawson, and I'm sure on the website, or at least my contact, so please feel free to ping me anytime. So thank you.
Thank you, Colleen. All right, so as I mentioned today, we're here to talk about some new federal regulations that may or may not, likely are, impacting your small businesses, the Corporate Transparency Act. And here today to help us understand what that is and what the steps are is Pablo Valentine. Pablo is a transactions attorney with Hershner Hunter. It's a full-service business law firm, and he grew up in the Eugene, Springfield area. He's the son of small business owners, and as such, he understands that business thrives when it focuses on truly important items and the bottom line. Pablo has a passion for helping his business clients develop, grow, and maximize their business. Pablo, thanks for being here with us today.
All right, well, welcome aboard. We're going to go through the Corporate Transparency Act. And this is going to be a very practical nuts and bolts type presentation, in part because this is so new. There's lots of questions and not like a lot of answers out there. and nor necessarily have we all thought through a lot of the questions and what the answers are going to be. So you might very well have some very interesting questions that might have a very interesting I don't know to answer you, but throw them out there if you have them. I mean, the best way to kind of help work through these things is to start asking the questions and figuring out what are the situations out there, how do we deal with them. But for the most part, most of you, it's maybe this big mysterious thing that shouldn't be too hard to comply with and deal with, as long as you just remember it exists. So just a reminder, this is not legal advice. I'm not your attorney unless I happen to be your attorney. But then this is not the legal advice you're looking for. Call me. So why me? What's going on here? So about 4 years ago, Congress passed this Corporate Transparency Act that is designed to combat money laundering. The idea is there was, the U.S., there were lots of studies and whatnot showing that the U.S. was a haven for money laundering because it was so easy to form entities, form kind of companies, and there's not a lot of oversight, there's not a lot of information about them. You can keep ownership pretty confidential for most situations. So in their infinite wisdom, they decided what happened is we need to make sure that all registered entities, essentially, are submitting information to the U.S. Treasury Department so that they have the information necessary when they need to conduct investigations. And so, one of the promises is that this information you submit, which is some personal information, will only be available to law enforcement, to banks for their customer due diligence purposes, and the kind of bank regulatory agencies, and the, of course, U.S. Treasury itself, which is hosting this, the software that holds all this information. So at least right now, that's in theory all the people that have access to it. So the first question is really always going to be, does this apply to me? And so it applies to you if you are an LLC, a corporation, or another entity that is formed by filing something with the Secretary of State or kind of a similar agency. Some states have, like a corporations division that's not maybe the Secretary of State. So a limited partnership, maybe you're part of a limited partnership that owns some real property, or there's statutory trusts, for example. So if you're a sole proprietorship, you're not an LLC, it's just you got your store and that's it. You don't have to worry about this. Same thing with a general partnership, because even though that is taxed as a partnership, it's not, you don't register anything. Or things like revocable trusts. A lot of like living trusts don't have to worry about this. If you do have a statutory trust, I don't actually know if statutory trusts need to report, but I think that right now the current wisdom is yes. So if you happen to have one of those fancy asset protection trusts from Delaware or Nevada or something like that, you probably have a reporting obligation. So like I said, you might think you're special, but actually, no, you're probably not. I mean, of course, you're all very special. But everyone pretty much, every small business out there is likely going to have to be filing these beneficial ownership reports. And another question may even be, well, if I don't have an LLC, if I'm just, if I do have a business and it's a sole proprietorship or it's a general partnership with my spouse or something, well, maybe this is the reason not to form an LLC. And I would say, no, the limited liability protection of an LLC or other kind of limited liability entity is better. This is a compliance obligation. It's a pain, but it's a pain that can be managed. So don't let this be the tail that wags the dog. So when I say everybody, I don't mean everybody. Everybody has to comply with this. There are 23 exceptions to reporting. And so, yeah, sorry, these probably don't apply to you. So this would be like credit union, a bank. And so, like I said, I'm sorry if they do apply to you. You're wasting your lunch with me here. I know there are some folks with banks out here that are with banks, for example, who are probably here to be able to impart wisdom upon their clients and customers. So maybe not a total waste. But, in essence, this is sort of a lot of times what happens is it seems like laws or regulations accept out small businesses from compliance because they're trying not to impart a sort of regulatory financial burden on them, and you want to put it on the big businesses that can deal with that. This is sort of the opposite. This is the burden on small businesses that big businesses pretty much don't have to comply with. And the exceptions really, most of them are regulatory or regulated entities like a bank or a credit union, broker-dealer securities that are registered with the SEC, right? Entities or accounting firms who probably must have really good lobbyists. But folks that have some regulatory body over them that are going to have some insight into what's going on, their ownership structure and everything. In addition, subsidiaries of exempt entities are generally exempt. So if you do happen to be in the exempt world, you don't have to worry about your LLC subsidiary that's owned by your exempt entity. So in all likelihood, the most likely relevant exception, if you're here and you're thinking, I don't want to comply with this, is there's a large operating company exception. And this is going to take into account a fair number of businesses in a community. I mean, if you have more than 20 employees, operating presence in the US, and you show at least $5 million in gross receipts or sales for the prior year, you'd be exempt. And again, gross receipts, right, is not net, so there's a fair number of businesses out there that are going to meet this exemption. So that's one thing to think about. The hard part about this one in my mind is really sort of, you have to have more than 20 full-time employees. So what if you have 21 employees and you happen to, somebody quits or you fire them or something, a position you're going to, refill, but now all of a sudden you're a reporting company. The exception doesn't apply. And so that's why I say the awareness around this law is the more important part, because you need to be thinking about situations that arise that not just are the situations you got to deal with because you're a business owner and you got to deal with things like, I got a position to fill, but in the back of your mind should almost always be, and does the Corporate Transparency Act make me comply with it because a little thing has changed? And that's going to be a tough one to, in my mind, remember. It'll be easy to remember a month or two from now. It'll be hard to remember 4 or 5 years from now. And one little note that I think is interesting, this is, again, one of these question marks. This is never going to apply to a new entity, right? I do a lot of M&A, helping people buy or sell businesses. And so, a lot of times what you'll do is you're buying a business, you set up a new entity to acquire the business you're acquiring. It has more than 20 employees. It has more than $5 million in gross revenue. But that new entity it doesn't have a tax return that was filed last year because it's a brand new entity. A brand new entity is never going to have a tax return from a previous year. So there's little weird situations like that are the reason why you kind of keep the awareness available. In addition, if you sell your business and you were exempt, well, now you don't have employees anymore. So suddenly you're a reporting company. And it's those little traps that are the items that even if you qualify for an exemption, you need to be kind of thinking about. So let's assume you don't meet an exemption. You're a reporting company, you don't meet an exemption. What's next? What you need to do is identify who the beneficial owners of the business are. And this is a little bit of a tricky term because it doesn't actually mean an owner of the business. It does include owners, but it includes anyone with substantial control over an entity. And we'll get into this a little bit. It's one of the most nebulous parts of the law, in my opinion. But in terms of ownership, a beneficial owner who is actually an owner, as we would think of owners of a business, means somebody who owns or controls directly and indirectly at least 25% of the, essentially we'll call it equity of the company. But again, that can be equity, it can be control of voting rights, it can be, it could be a capital or a profits interest. So those of you that have LLCs might know what profits interests are. Convertible instruments, options, or as they often have in a lot of these laws, or anything else that shows ownership. You're like, all right, I don't know what that means, but something like a warrant or something like that. maybe what would they be talking about? So for most small businesses, my assumption is this is fairly easy. If you don't have a really complex capital structure with people with options to purchase or warrants or the kind of complex voting trusts that other people have, you might have a creditor with some control of, for the most part, it's like, yeah, me and my spouse own this business, or, we were a group of 4 people, we're a group of 4 doctors, we own our medical practice. Great. Those are the owners, right? The harder part is when you get to the substantial control. So the folks with substantial control are senior officers, like your CEO. So like Bonnie would be a senior officer of the Springfield Chamber, if it happened to be a reporting company, but it's exempt. It's also, and the interesting thing about this in my mind is they give these examples like CEO, CFO, chief legal officer, kind of some other examples. And a lot of times I'm thinking to myself, how many companies that make less than $5 million a year have like a chief legal officer, right? I mean, maybe even not even a CFO, right? I mean, you might just have a controller, a bookkeeper. So there's a certain approach, I think, that came with this that was sort of a traditional approach of, well, compliance is going to be put on these big companies that have the ability to deal with it without the realization that, yeah, actually, no, this is going to be, we're talking about, 2 people that might own a rental duplex in Springfield, right? So it does create a lot of kind of thinking through what's going on there. So again, the people that can appoint the senior officers, a traditional example is the board of directors of a corporation. So if you're in a corporate structure, someone that can make or has substantial influence over important decisions. So that could be somebody that, for example, could maybe baked within some shareholder agreement or operating agreement, even if they're a minority owner, has some ability to sort of cause or maybe block certain important decisions. So it involves a little bit of kind of looking deep into your corporate documents.
I have a question on that.
Sure.
With that 25%, is that combined with all of those things? So like if you have 10% ownership or 10% voting rights or 5% this, that would include 25%?
So for the ownership, so it's 25% ownership. And so I think that means, if you have, so typically speaking, I will say most people, if they own 25% of, we'll just say the stock of a company, they probably have 25% voting rights and everything like that too. So it's all going to be combined together. I do think if you had somebody, for example, that had a 10% sort of equity share of profit, but they had an inflated like 25% voting right, then yeah, they're qualifying as an owner. So
one would.
Yeah, and even if they didn't, then maybe they have substantial control. And again, the ownership and substantial control are 2 separate tests, we'll say, 2 different arms of how you might, of who might be a beneficial owner of your company. And they, of course, again, have a nice little catch-all that says any other form of substantial control. So what does that mean?
Does this apply to nonprofits?
It,
General 501c3 standard type.
so it doesn't apply to tax-exempt entities under 50c3 or 501c. So should be all the laundry list. I say it doesn't. So sometimes there are nonprofits that are not 501cs, like for example, the homeowners association. This applies to homeowners associations. Can you imagine the mess? They can barely get their streets paid. Right? So they're going to have to deal with all of this. And sometimes there are just nonprofits that just don't have their tax exempt status. And I don't really know. That's another question. For example, it takes a long time to figure out if you qualify or not, right? You send in your stuff to the IRS and then, a year and a half later, maybe you get the letter back. I don't know what happens there at that time. You form the entity, you submit your 1023, do you report or not report? I don't know. right? And I'm sure, so, there's probably some conventional wisdom that will be forming out there. I don't know what the answer is. So you're lucky if you already know your status. And again, they also have a note for trusts. Keep in mind that, sometimes people have, maybe they have their ownership in a trust. Well, you need to look, sometimes trusts might have a different trustee than, say, the original settlor of the trust, or maybe the beneficiaries and the trustees don't match up. So it could be there's a little bit of a mix and match of who are these beneficial owners, who has control over these voting rights. Again, for the most part, most people probably, right, I set up a living trust, I'm the trustee of my own trust, I'm the beneficiary of my own trust, and I'm the owner of the business, so it's easy. But again, you're looking out for unusual situations. You first, and then.
So this thing also includes revocable trust?
So and when I say for trust, what I mean are trusts that own part of the business. So for example, if you have stock or a membership interest in an LLC in a trust, then when you're looking to determine who the beneficial owner is of that LLC interest, it's not the trust. You would never report a trust as being an owner. You would report the trustee, you have to report a real natural person. And so when you're looking at the ownership of that stock, you need to say, okay, well, who is the person I report as the beneficial owner of that? It might not be the trustee, or it might not just be the trustee. There might be other individuals in that trust that are going to be beneficial owners. So revocable trust, just to be clear, revocable trust in and of themselves don't have to report. So if you are a revocable trust and you have your investment account in your revocable trust and that's all you have in there, that's fine.
So what would be the downside of reporting, even if there's a possibility that you fall under one of these other things?
I can't think of a downside. I mean, aside from more information to wrangle, more information to keep up to date, just a little bit more compliance. But yes, it is the safer pathway in my mind if you don't really know. So, but again, there's also exceptions to the beneficial owners. So there's 5 general exceptions. So a minor, as long as you're reporting your parent or guardian, but if a minor has some ownership interest. So nominee, intermediary, custodian, agent. So that could be, for example, a lot of times stocks you might own, or they're in a custodial account, of course, or and then employees, even if they would seem to exercise the sort of substantial control, if they're really just employees and they're not senior officers, they don't count. Again, in a small business, the line between who, where you probably don't have formal roles, formal senior officer roles, where that leaving line between a person who is just an employee, and yet if you don't have a chief legal officer, maybe you don't have a CFO, does that mean your bookkeeper or controller is or something? I don't know. This is, I think, one of the most interesting ones. They say a future interest in inheritance. So in other words, if you were simply named in a will as somebody who could inherit stock or ownership interest in a business, then you don't have to report. Which I think is fascinating. I'm like, the fact that they even have to think, they think they have to put that in there. Like, I would never have assumed that was somebody that would have to report in the first place. But I think it just goes to show the scope of what they're trying to, what they intend. How many people are supposed to be sort of reported as potential beneficial owners? They're looking, they want more information. I mean, to your point, right? That's the safest way is to report more information. They would love more information. They think that's great. And then a creditor who is really just a creditor, so like a bank, doesn't have to be, isn't a beneficial owner, even though I can assure you, I've read through many bank loan documents, and they give a lot of control over your business. But that doesn't make them a substantial owner unless they had other certain rights. I mean, there's certainly I think there is a way to tip over the line even as a creditor, but we're probably talking more asset-based lenders or certain sort of very sophisticated type creditors that have specific portfolios they're looking at. In addition, to reporting beneficial owners, you also have to determine who your company applicants are. So this only applies to new businesses going forward. I assume most people here, if they have a business, they have one that's existing. So any new entity that is formed in 2024 or onward also has to report with the beneficial owners, whoever formed or created the entity. So if you have an existing entity that was formed December 31, 2023 or earlier, you don't have to worry about this. And so this means the person who directly files the entity with the Secretary of State or who directs the filing, and there can only be 2 company applicants. So one example they give that I'm very happy they gave because it's salient to me is the attorney that directs the paralegal to file the articles with the Secretary of State. The paralegal is the person who directly files. They're the ones that actually submit the document. And I am the person that directs or controls that filing. And they do clarify that if we send it by FedEx, that FedEx courier is not a company applicant. But it is interesting. I wondered about this one too, but they do say, but no more than 2 company applicants. I mean, oftentimes what I'll do is I'll have a new client sign the articles because I want to make sure that they're sort of affirming that all the information is correct. That's a good check for me. It's somebody that I have never worked with before. But I put it together and then I direct my assistant to file it. There's kind of 3 people there, and I don't know who. I really don't know who I would report in that situation. And I'm not even exactly sure why they're getting this. This just seems like somebody had I got a good idea, and nobody really thought it through really carefully. I mean, especially because originally, the original rule required you to report your company applicants regardless of when you were formed. And somebody was like, I don't know that I can even track down the person to file their company, let alone get them to give me a bunch of personal information about themselves. So why do we have to do that? And I think they looked and they're like, oh yeah. So what are the details you need to put?
Details, I'm sorry. I just got that.
I'm trying to make this a little lighter. So what needs to go in your beneficial owner information report? So for the company, you need to report a legal name, trade names, and that includes trade names that aren't registered. I dug into that because I really wanted to make sure that was right. So as I'm sure you all know, if you do business under a name that is not your legal registered name, you are supposed to file with the Oregon Secretary of State a assumed business name, and then that's how you do business. But there's lots of people out there that sort of do their name, do whatever they want to do. They hold themselves out there. Otherwise, you should be filing an assumed business name application. Just FYI. Even if you drop just like LLC or Inc. from your name, you're supposed to file an ABN. But here what they're saying is even if the trade name isn't a registered name, so any name you're doing business under, you need to report that. The street address of the principal place of business in the US of the business. So again, not a PO box, not a mailing address, has to be a physical street address. Jurisdiction where you were formed and your taxpayer identification number. So most of this kind of information is the kind of information, I mean, when you look at this is basically all the information aside from the taxpayer identification number, all the information you would report to a Secretary of State anyway, right? It's not like new or really super confidential information. And of course, you're just reporting to the federal government what your federal government tax identification number is. So it's just like I'm just going to grab some stuff from different agencies and you guys can't figure out how to collect it all, so we're forcing you to give it to you. The trade names are the only one that but again, I'm not even really sure. I think the idea is because this is for combating money laundering, if law enforcement comes across a name that seems like, but they can't find it registered anywhere, they still want to be able to try and track it down. Because money launderers, they always comply with all the laws. So beneficial owners and company applicants, for those folks, you need to do the name, birth date, a residential address, or for company applicant, didn't put this, for the company applicant, it could be a business address. So for example, if I were to form a company for you, I don't have to give you my residential address. I can give you my business address. Not that I would mind giving you my home address, don't get me wrong. I trust you all. Identification number from an official document and a copy of that document. And that's the one that's a real pain. So the official document would be things like a driver's license or a passport, something like that. But then you actually have to upload a picture of that document I assume to confirm that it really is a real document or something. But that's the sort of thing, it takes a lot more bandwidth. You gotta, it's easy enough maybe to get somebody to send you all the other information, but getting a picture of the ID is, I think that's going to be an issue that's going to come up.
Would the ID number from an official document and a photo of it be, instead of the driver's license, be just a copy of the filing with the Secretary of State's office that shows your registration number?
No. This is for the beneficial owner. So Phil, if you're the beneficial owner, it's official document of you, yeah. So your passport, your driver's license, and then a picture of it. And so just choose the document that has the best picture of you on it. That's really important to make sure when they're looking you up, see if you're money laundering, you're looking good. Okay, am I done yet?
Probably not.
Yes! Yes, you are done! You've submitted all the information. So that's it. That's all you have to do. And you don't have to renew it. It's a one-time filing. So once you submit this document, you're good. Well, I mean, unless you made a mistake, right? Then you got to go back and correct that. So you have 30 days. If you made a mistake on your filing, you have 30 days from realizing the mistake to go back and fix it. And they say you have 90 days from submission to correct those without any penalties. So again, you have 30 days from discovering the error. So if you discovered the error a year later, you still got to go correct it. You have 30 days to do that. I guess what they're saying is then the potential that penalties could apply. Yeah.
I was just wondering, on the previous page where we talked about the address, what if you move? You said you only have to file it one time, but if you move.
Yeah, they're updated.
See, this is my plant in the audience. Oh, well, yeah, okay. If any information changes, then you have to go back through and update it. So again, this is any information that changes about anything you submitted. You need to go update it. So if you move, if any beneficial owner moves, if the business moves, you got to go update the report. If you're, I have a slide on different potential changes. And the real kicker that I hope they fix is, it'll be on this. So here are different examples of what could happen. The new trade name is the one that I think, for example, you decide maybe you have a new business line, you're like, have a new assumed business name. You also need to, so these are just examples, right? Any of the information changes, you need to update the report. So a big one would be beneficial owners change, right? I mean, maybe you bring on a new owner, somebody dies, something like that. You're gonna have to update it for the new owner, the owner that left, owner that's coming in, whatever it might be. If somebody was a beneficial owner or they're not anymore. You also need to,
Would that even apply even just a beneficial owner moves and their address changes? Does that need to be updated in the report?
Yep.
Oh, man.
Yep. And like I said, I'm not really quite sure what happens. I mean, they do say specifically if your identification number that you submitted for a beneficial owner changes, you need to update it. I don't really know what happens when your driver's, for example, when your driver's license expires, you get a new one, you have the same number, but you get a new ID, so the picture is changed. I'm just not sure. I would assume the idea is, yeah, you probably got to update that too. Wow, what a pain, right? I mean, this is the real compliance burden. This is the real, remembering 5 years from now that this law even exists and that you need to do something about it. I forgot to mention, so a little bit earlier when we were talking about exemptions are self-executing. You don't need to file saying I'm exempt from reporting. You just don't have to file. But if at some point in time you're exempt and then an exemption no longer applies, then you need to go report, right? You need to go file a report. So that's where I'm saying, well, the large business exemption, like what if you do like your revenues dip or your employment count dips? Presumably you have 30 days to go file a report. And then if you filed, and then it turns out an exemption does apply, your business has grown, your revenues are high, your employment count is high, you need to go in and report that you're now exempt, which is
Basically reporting.
Yeah, exactly. And that one, it should just be a check the box. This is like, I'm now exempt. But the real kicker is an updated report is just a new report. I'm assuming that it's partly just a functionality of their software. But if you have to update it, this means you have to go do a whole new report and resubmit all the original information and then submit the new information. So
like if you have, a CFO and a COO, and the CFO changed addresses, now I have to go track down the COO's updated driver's license and resubmit all of that too?
But yeah, so hopefully what you do is you have all the original submittal information and you just swap in the new piece of information, but yeah, then you have to go resubmit all of it. Right, at some point in time, you would hope what they would do is have a way to just correct just the one line item that needs to be corrected. But apparently they don't have that now. They didn't really stand up the whole reporting platform until like right at the end of the year. I mean, it went live January 1 with strong indications of, because it wasn't even ready until like the very, very end of the year that they were hustling to get it done. So it may not be, it's a pretty simple interface. So it's probably not the most robust system is my guess. I don't have any visibility into that. We can talk about this a little bit more, but they do also mention that they'll have an API interface so that kind of third parties that help do the reporting can just kind of collect the information and just submit it on. And it just says right now, if you want the information, contact us. And we've heard that the contact us is, if you do that, then they just say, great, we'll let you know when that's ready. So, so timing, when do you have to do anything? So if you have an entity that existed as of December 31, 2023 or before, you have to submit your beneficial ownership information reports by January 1, 2025. You have all of this year to report. So you have a good amount of time, probably not a bad idea to just wait and see especially if you have pretty simple structure, right? You and your business partner, and that's it. There's no other control, no other people with control over your company or anything like that. You might as well just submit. It's pretty straightforward to do. If you have any complexity, you might want to wait and see as questions arise or guidance comes out, because there's no real rush. If you form an entity this year, you have 90 days after formation to file your report, and starting next year, you'll have 30 days. And that's a pretty, the 30 days seems like, I'm sure in their mind they're thinking, well, yeah, once you form it shouldn't take that long to get the information. That's a pretty quick turn in my mind. Sometimes you don't know necessarily exactly who all the owners are going to be, what their relationship is. You certainly don't know. I would say who the people are that have substantial control over the business are. You probably you've not hired a CFO or CEO at that point in time if you are going to have one for this business, right? There's all sorts of stuff that just suggests you're going to have to submit quickly and then probably update it a number of times before you're sort of at a settled state.
So this report is not the individual interested owners have to complete. It's one report that includes all of their information. Oh.
The full meal deal, yeah. It's one report that goes. And to your point, your question about, they have a PDF, fillable PDF form that allows you to input all the information and I think embed the picture ID or whatever. So you can just take that, save it, and then update it. So that probably, ironically enough, that's probably the easiest way to do it now. It's sort of old school technology. You kind of hate to have that sort of one piece of information with everybody's very personal information. So one of the ironies, so one thing you can do is you can go on there as an individual, you can get what's called a FinCEN identifier that just is, I put in my information, I have an identifier, and I can give that identifier to somebody else. So pro tip, that would be great if your owner did that. So I got the FinCEN identifier, I just wanted to give it a try. And ironically enough, when I first opened up the page, I got this big warning that said, security risk, they don't have their certificates in place. This page might be trying to steal your personal information. I really wish I'd taken a screenshot of that. It was yes, they are trying to steal information. But one way to avoid sort of the updating would be if all of your beneficial owners went in and got a FinCEN identifier and then gave you that identifier. So you can report just that identifier. And then it really puts the burden on the owner to do the updates on like addresses and whatnot, in theory, right? But again, as the reporting company, you still have an obligation to make sure that information is getting reported. So you also have maybe less visibility into it. I'm a little torn on what is the best and easiest. I mean, it puts the at least burden of going in and updating the information on that one person. But I can assure you, it may surprise you all, but there are flakes in the world.
No.
They just say like, no, I'm gonna get to that, if they even go that far, right? And maybe the better is just like, if they have enough trouble just getting you the updated information, how likely is it that they're gonna go on, update the information, tell you it's been done, right? So, one thing to think about. So again, why do I care? Aside from we're all law-abiding citizens and want to do the right thing and just love filling out government forms. So it's pretty stiff penalties. So it's a civil penalty of up to $500 a day for not reporting, and criminal penalties of up to 2 years in prison, $10,000 fine. Yes, they actually criminalize this, so it is not, non-compliance is potentially a criminal act. And again, this can apply to any number of folks. I mean, it can apply to companies, it can apply to beneficial owners. I mean, one situation I think that they're very aware of that many people asked was, well, what if we can't get a beneficial owner to give us the information? Like, we're like, yes, give us your social security. I mean, again, in some ways, there's part of all of this, which is, it seems like very sensitive information, but we are just giving the government information that we've gotten from the government, right? So there is there's some irony about it all. And so, maybe there's a theory there why should we care so much? Why should anyone care? But we all know there are going to be some people that are going to be like, I am not going to give the government my taxpayer identification number. Or this person, yeah, sure, I'll file my taxes. I mean, there are, of course, some people that don't do that part, but you're going to have some owners that are just going to be like, no, I'm not going to do it. I'm not going to give it to you. If they'll even respond to you, right? I haven't talked to you in 20 years. I'm not going to talk to you now. And so, in theory, these penalties would apply to the beneficial owner who is not complying. And what you would hope is, as long as you can show as the company, and there's actually my understanding is there's a check the box that just says this person won't give us the information, basically, which I assume there's a red light that goes on in FinCEN that's like, oh, yeah, here we go. Test case right here. Let's go for this person. All you can really do, I think, is tell them, hey, we've tried, we've done what we can do to get this information. This is one of those areas where I'm very curious to see what sort of guidance they're going to give on what are kind of reasonable efforts. What do you have to do? I mean, for example, if you have a beneficial owner that's not giving you information, do you have to go sue them? And so have a judge, direct them that they must give you this information? Is that reasonable? Or is it reasonable enough just to send a certified letter that says, hey, we really need this information and you're putting the company in jeopardy? I just don't know. And so I think these are the kind of things that will evolve over time. And my guess is it's like many new programs in the beginning, efforts are all going to be around providing information, making people knowledgeable about what their obligations are, what the penalties are for non-compliance, and trying to get voluntary compliance. And then at some point in time, I'm sure FinCEN will make some efforts to show that yes, they're serious about this. But again, when you think about all the people this snares, I mean, this is small businesses. This is the people, plumbers, dentists, people that own, like I said, like a rental house, and you just put an LLC for liability protection. You have to comply with this, and sometimes even getting that information out to those sort of folks is tough. There's also, I think, just a lot of confusion. I mean, one example, there's this, the big entity exemption that says, hey, you don't have to file if you have 20 employees, more than so much revenues. You talk to a business owner and say, hey, you're going to have to go comply with this. And they say, no, I don't. My revenues are fine. I have hundreds of employees. Yeah, but you own that real property that the business is in a separate LLC. And that LLC doesn't have any employees. Oh, yeah, that. So there's always often or maybe they have a little side. So again, a fully exempted, a fully 100% subsidiary of an exempt entity generally doesn't have to comply. There are some exceptions, but maybe you have a joint venture with somebody and maybe your JV partner isn't exempt. So that company at least needs to go report. Maybe they'll report one half of my ownership is exempt, but right? So there's all these weird entanglements that are going to start coming up that people they aren't thinking about right now. I've read somewhere, for example, it's not uncommon as a way of sharing ownership of an airplane to put an airplane in an LLC and have 2 or 3 owners, right? It's an easy way to kind of do cost sharing and whatnot. Well, okay, there's an example of something that, typically businesses that own airplanes are pretty big, but that entity itself probably is not. Even if it's going to report something that just says all my owners are exempt. So it's all sorts of stuff that's going to come up that I think is going to be fun for some people and a headache for others. So some things to think about. And again, for most small businesses, probably it's not a huge compliance burden. You go submit your information. It's a closely held group. That closely held group has all the control. You report your information, and you just got to chalk away in the back of your head. If anyone moves, if we move, other things update, then we got to go update our report. To the extent you need to start, if you have beneficial owners that, especially if you think they're going to be difficult, go out and start talking to them and saying, hey, this is the law. We're going to need to collect this information. We'll be coming to you, but just want to flag it for you. Some people need a little bit of time to get comfortable with these things, with new concepts, with, whatever. They might want time to research it themselves. Better sometimes not to just spring it on them. Hey, I really need you to give me all the sensitive information right now, right? Give people some time to, let the concepts marinate in their head. Would be a good idea, if possible, to update your corporate documents, your governing documents to require compliance with the Corporate Transparency Act. That's a little bit of a tough one because a lot of times governing documents require unanimous approval to update. And so if everyone's in agreement, then it kind of feels like, well, why do we need to do this? If not everyone's in agreement with complying with this law, you're not going to be able to update it anyway. But again, it would be a good idea, especially if you think you might have new owners down the line. It's a flag. It's something to remind people. It's good to have the legal mechanisms in place, and we're updating our documents to make that sort of a more standard piece of just when we help people form entities. And again, of course, nuts and bolts. Figure out if you have to report, if you do need to report, what information you need to gather, and figure out some way to track the changes. And whether that's just maybe a periodic plug on your calendar to say, hey, CTA reminder, has anything changed in the last 3 months or 6 months or whatever? I mean, the whole reporting window for reporting changes is just remarkably short. I mean, 30 days is ridiculous. that does not take into account how real human beings sort of act, right? I mean, the number of clients I have that don't tell me for like years that they've moved, it really only happens when finally we're like, you haven't paid that invoice in a while. Oh yeah, sorry, I forgot to tell you. Okay, thanks. Would be good to know. So be thinking about those sort of items, and there's no great way. I mean, again, if you were to be robust about it, you do it once a month, right? But can you imagine, I mean, asking every owner once a month, hey, just want to make sure you haven't moved or anything, right? And for more information, so the FinCEN website, and this is actually the website where you would do the reporting. So there's a link. There are third parties that are helping folks with the kind of the data gathering and reporting. You know, we're still looking at solutions. We'll likely have it. From what I've seen though, many law firms and almost no CPA firms are touching this. You know, we're going to be doing something for our clients, and we're trying to figure out what the best solution is because, you know, funnily enough, when clients have questions about new legal requirements, they come to their lawyers. So we probably should be in a position to help them out with that kind of stuff. I mean, at minimum, though, lawyers are going to be helping folks figure out, are you a reporting company? Does an exemption apply? And they should at least help you sort through who your beneficial owners are. Now, maybe then from there, they say, great, and here's a list of folks where you can go that can help you with the reporting itself.
So is this different from IDs and Secretary of State, which is specific to the state? Is this a national database or is this?
This is a national, yeah, so it's the US, it's housed in the US Department of the Treasury. And
will this be public?
No, so it should only be available to law enforcement. It'll be available to banks for doing, I think, kind of the KYA, the know your customer type stuff.
Because we're doing,
yeah.
Banks are doing this now. So is it your understanding that this will take that requirement off of the banks and then we can utilize this database for this rather than collecting it from our clients? That
I don't know. I don't know if this is going to be a tool to verify information or to gather information. My guess is to verify, right? Like you get the information from your client and then you can go into this database to figure out, okay, did they tell me the truth? I don't know what the parameters are around bank access to all of this. But my understanding is this is a tool the banks will have access to for their regulatory compliance. Yeah, incredible. Yeah.
Was that large company exemption over 5 million in revenue and over 20 employees or
both?
Both, okay.
Yeah. So yeah, so if you don't want to comply and you're like right at the edge, just hire more people.
Make more money.
Yeah, there we go.
Quick question, Pablo. Do you have any idea, does it take 5 minutes to fill out the form or is it an hour to fill out the form? Have you tried it?
Yeah, I've done it. It's quick. It doesn't take long. I mean,
The
length
of information.
Yeah, I mean, gathering the information, I'm sure, is going to be the gating part of all of this. You have to do it in one shot.
Okay.
Right? You get on there, you fill out all the, I mean, if you get to the very end and you figure out, oh, I don't have that last piece of information, FinCEN does not have any way for you to save a report midstream. So it's gone. That's one of the reasons why you might do like a third party, because then maybe they have a platform that helps you. You can submit information, save it midstream. If you've made a mistake, maybe go back and correct that more easily. But that is also, so how long it takes you is going to depend on how many beneficial owners you have. Right, and you can gather, but again, they have this PDF that is a way to sort of collect the information, and there is a way to submit that PDF itself rather than the just online form that you could, has a bunch of data points. So that's an easier way maybe to go through that, and then easier to see, obviously a PDF you can save, so you can then, you go back and be like, oh, I don't have that person the first day, save it, call that person up, email them, whatever.
One final, for clarity, because you started off on the charitable organizations or so there's all kinds of, what did you say, 14 designations.
23
501c,
exemptions.
23 501c.
Oh, there's 6 501c, I think there's 6.
So just for those who are all 501cs exempt? Or, because not all of them are exempt from taxes.
Right. I would have to look at that and see. I mean, my recollection is what it said is if you're a 501c, well, it said if you're a tax exempt entity under a 501c, you're exempt. So that's a great question.
Okay.
Yeah, I don't know the answer to
Okay.
that.
All right.
And again, not everyone that is, homeowners associations often have an exemption from income tax for their dues essentially, but they would be a reporting entity. So it's important sort of to kind of step through all of these. Anybody else?
All right.
Fun times. I'm sure everyone's gonna go rush out. They're like, I can't wait to do this. I'm so excited.
Can we call you if we have any questions?
Yeah, well, certainly we'll be helping people out, but yeah. All right, thanks.
Thank you, Pablo. Phew, okay, all our questions are answered. All right, I had just a couple takeaways. Safer to err on the side of reporting. If you've got a question, find a way to flag this, not now, but 5 years, 10 years down the road, find a way to flag that you need to be in compliance with this. There are going to be a lot of changes over the next year as any new, law comes out for compliance. There will be changes. As we receive information, we'll continue to put updates on our small business solutions page. You can access that from our website. We're going to send you a link to that in the next couple of weeks with a recording of this presentation. If you saw there was this on the tables, this has some information from the U.S. Treasury. We're going to send a digital version of this out along with the version in Spanish for you. And then last takeaway is that if anyone has an opportunity to give feedback to the U.S. Treasury, the one thing we're advocating for is that we should not have to fill out a new report every time we have to update information. Hopefully that will change. All right, well, once again, Pablo, thank you. And thank you to all of our sponsors who make this possible. Really happy we could put this together for you guys today. Thank you.